Whoa, good morning, Lagos. Good morning, everyone. This is Follow the Money brought to you by Nairametrics. My name is Ugo Dre. And if you're just listening for the first time, where have you been? Where have you been? Anyway, we do this every Monday, 8 to 8:30 on this channel. Of course, you can catch this episode and previous episodes on our YouTube channel, Nairametrics TV. That's the top YouTube channel, at least in Nigeria, when it comes to business, finance, and economics. Yeah, we give you top podcast for you to enhance your knowledge about investing and financing and understanding the Nigerian economy in ways that is easy for you to appreciate. Yep. And so this particular episode and previous episode, you would find on our YouTube channel, in case there are some things that, you know how radio is, some probably will say something that you miss, like, oh, what did he say? You can't rewind. But of course, you can always listen to recorded versions on, in our YouTube channel. Of course, we've got a whole lot of other programs on our YouTube channel. In case you're a fan of Drinks and Mics, our flagship podcast, new episode dropped last week, and it was fascinating because it was the first episode that we did with a live audience. Yeah, so we had an audience in the house, and it was actually a season finale. So we had to cap that finale with a live audience, and it was enthralling. Like, I had a great time on set. So if you want to watch that, just hop onto our YouTube channel, Nairametrics TV, Drinks and Mics, and you would see that last episode. It was just amazing. With a lot of the nuggets that our guest and our co-host shared on that day. So if you're somebody who's trying to navigate the Nigerian economy, or somebody who's looking for the next big thing, in case you missed out on the stock market boom that we've been seeing in the last few weeks, then you might want to go listen to what the guys had to say. People always say, I don't have money. Hey, people are making money in this economy like crazy. And they're just regular people like you and I, so don't get it twisted. Anyway, down to the show. What a week it was again for the Nigerian stock market. Check this out. Nigerian stock market has gained for 9 straight weeks. I've been covering this market for the better part of a decade and a half or more, and I haven't seen this market done this good. 9 straight weeks, all share index has been rising. Like, it's crazy. Like, we put out an article last week on Nairametrics, and we said we have not seen this happen under any president before. I'm not saying there's anything Tinubu is doing, but looks like investors kind of like Tinubunomics, because the all share index has been on a tear. And so last week, it gained another 2.18%. Imagine in 1 week, 2.18%. I'm thinking I will have 52 weeks. If you analyze that, you know how crazy that sounds. 2.18% at 134,452 to end the week, ended July 25, or to close the week ended July 25, 2025. Market cap, that's the total value of stocks on the Nigerian Stock Exchange, has now risen to 85 trillion naira, 85 trillion naira. Now, that is less than a third of GDP. So looks like there's still a long way to go, because in most economies, the market capitalization, the stock market, is typically more than the GDP, more than the size of the entire economy. But in Nigeria, is way less. That's also because a lot of companies are not listed on the exchange. We probably have max 150 companies or thereabout, or 155 companies listed on the exchange. And perhaps maybe only 30, 40 of them are really active in terms of driving market capitalization. But it doesn't really matter. So 85 trillion is where we are in terms of market capitalization. So in terms of volume traded, it did drop to 3.6 billion shares from 5.9 billion shares. So what does this mean? It just means that the number of shares that we traded that this week at volume, that's activity volume of trade, did drop, suggesting maybe people bought fewer shares despite the gain that we saw. So fewer shares but higher share prices often leads to, same higher market capitalization. So 60 gainers and 43 losers was what we recorded during the week. So, of course, it's the earnings season, and so there were a lot of results announced last week, and you're gonna be hearing more results come up over the next few weeks because it's the earnings blitz, as I like to call it here on Follow the Money. So earnings blitz means results are published, and then if you're an investor in any of these companies, you can go check to see how well your investment or the stocks that you've acquired has performed. Of course, every week we do have gainers and winners, and we will talk about the top losers in a bit. But let's look at the sectors as well. So in terms of sector winners, we have the industrial goods sector. They basically led the gainers chart, and these are mostly companies that are in the manufacturing of industrial goods. So for example, you have Q6, you have Lafarge, you have Boa Cement. These are companies that are in the industrial goods sector, and their share price all surged during the week, gaining 4.66% in total. And the next wave of gainers was the insurance sector. Insurance sector gained 3%, with the likes of International Energy Insurance and Sovereign Trust Insurance leading the gains there. And then the consumer goods sector, another sector that is into manufacturing, but manufacture of consumer goods, right? Like food and beverage goods, the likes of Nestle, Cadbury, and all that. Yeah. So they also gained 2.81% during the week. And of course, the banking sector that has been dominating volumes of trade all year round also gained 1.84% during the week. And that was led mostly by Wema Bank. Wema Bank was one of the major drivers of that gain. And then, of course, you have the oil and gas sector. It eked out a little bit of gain. I mean, 0.87%. It's a gain anyway. And that was driven also by Owando. So that's how well, stocks did, sectors did generally during the week. So who are the top losers? I'm just going to talk about five top losers during the week. Starting with Nemeth. Nemeth lost 19.25% during the week, and that's followed by Meyer PLC. Meyer PLC is a paint company, and Nemeth, by the way, is a pharmaceutical company. In case you're wondering what that meant or means. So Meyer lost 21.43%, and then Omatech Ventures, one of the few ICT companies listed on the exchange, dropped 23.93% during the week. And of course, Secure Electronic Tech, another IT company listed on the exchange, dropped 23.97% to round up the top 5 losers during the week. Of course, for the top gainers, which of the stocks are in your portfolio? You want to check them out. Starting with Wema Bank. Wema Bank gained 23% during the week to be the highest gaining stock for the week ended July 25, 2025. So if you're a Wema Bank shareholder, go and check. You've just added 23% to the value of your investment in that stock. So if the stocks you had in Wema Bank was 1 million naira, then you've gained 236,000 naira in 1 week. No, 223,000 naira. Yeah, 236,000. What am I saying? What's wrong with my math? 236,000 naira in 1 week. Yeah, that's what you'd have made if you own Wema Bank shares. These things are not rocket science, man. It's just easy to figure out. And so if you don't want to hold the stock anymore, you know what to do. But if you think that the share price is going to keep going up, then you want to hold on jealously to that stock. Nigerian Enema, whereas next up, it gained 32% as well. That's an industrial goods stock. And then you got Academy Press. Academy Press, I was tracking when it was like 4 naira, and I said to myself, this stock looks highly undervalued. And investors have somehow picked it up, and it's gained 33%. Looks like I kind of missed the boat on that one. So Academy Press, of course, makes books. 33% in 1 week. That's what it gains. This is real money. This is not Ponzi. This is real money. Like real money gain in value from stocks on exchange. And the number one stock gainer last week was the Initiates. The Initiates gained 60.8% last week. 60%. For those who think stock market is where you lose money, I'm like, these are real gains. Like, this is not fake. This is real. And we're seeing it happen on the Nigerian exchange. This is not 2007 or 2008 or 2010 or 2009. or 11 when people still have memories of losing a lot of money in the stock market. It's a whole lot different now. Even though you still have, there's still potential to lose money. There's also potential to gain money, and it's a lot more transparent than we used to have. You have a Security and Exchange Commission that is way stronger. That's a SEC, a regulator that has better oversight on the market. You also have an exchange, there's a Nigerian exchange group that also has very solid oversight on the market as well, and have very strong rules that sort of guards against manipulation. I mean, it might not be 100% foolproof, but at least it's way, way, way ahead of what it was several years ago. And companies are a lot more transparent now because results are published on time, and the disclosures are way, 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 way better than it used to be. And you have a lot of, investment houses out there that are dishing out analysis on a daily basis. Like if you subscribe to some of their newsletters, you're going to be getting several breakdowns, and there's just so much information out there that you can learn about stocks. So this is not 2009 or 10. This is 2025. So investing in the stock market is not as risky as it used to be back then. It is a whole lot better. Yeah, and I say this, a whole lot better than it was then. Of course, you also have much more well-informed media than it was back then. So information is on a day-to-day basis. You have platforms like Nairametrics. Yeah, you have platforms like ProShare as well. Basically educating investors every day, and a whole lot more as well. You also have a lot of people on social media that you can follow who are also breaking down stocks. And hey, you also have investment apps, some of these apps that you use. One of our partners, Bamboo, by the way, so you can check out Bamboo app, and you would see as well information on which stocks to buy and why you should buy them. They do have that as well. And of course, Cowrywise also provides the kind of information. It's just a whole lot out there that you can leverage on to make better investment decisions. So don't just sit on sidelines, man, and don't invest in Ponzi's because you're looking for superior returns. You can get good returns investing in companies that companies that, you see every day, you buy their products. I mean, who doesn't know Wema Bank, right? Exactly. Who doesn't know Dangote Cement or Dangote Sugar? You probably consume those products on a daily basis, or you interact with their services or enjoy their services. So, all you're doing is you're investing in companies that use their products. And so these are real things, and they're all approved SEC companies. And so, yeah. And of course, if you're not subscribing, do subscribe to Follow the Money. It's an exclusive website, ftm.ng, authored by me, sincerely, where I break down some of my stock picks. So if you want to know some of my stock picks and the reason behind them, then you want to check. And it's not only stocks, by the way. So for those who are also interested in investing in fixed income securities like commercial papers, FGN savings bond, all approved securities, you can also check some of our recommendations in there. Look, this is the earnings season. Don't sit by the sidelines. Make that money freaking work for you, man. All right, so we're going to take a short break, and when we're back, there's a whole lot to chew on. Like I said, it's the earnings blitz, and so earnings season is full of results, and a number of results that we're going to be going through when we come back. See you in a bit. All right, welcome back. This is Follow the Money, brought to you by Nairametrics. Of course, I am Ugodre, and this is the second segment of the show. If you missed part of the first, of course, like I said earlier, just go to our YouTube channel, Nairametrics TV. If you're not subscribed yet, subscribe and turn on the notification button so that you can get notified whenever we have new podcast. So we'll go to the second segment of the show where there's been a lot of information. So first off, we start with Lafarge. So Lafarge delivered blockbuster Q2 numbers. The leading cement producer recorded a massive 70% increase in revenue for the second quarter of 2025, posting 263.8 billion, up from 157.8 billion same period last year. So the cement makers are selling a lot more. So, what's going on? Are we consuming a lot more cement in Nigeria? Are we building a lot more houses? I kind of think so. And you can see this reflected in their numbers. As much as price increase also happened, Looks like volume is also pushing up. So operating profit, one of my favorite benchmarks, was up 153% to 120.6 billion. Profit after tax up 248% to 84 billion. And of course, the CEO of the company, Lulu Alade Akinyemi, also mentioned that the results was due to innovative product offerings, strategic operation distribution, focused cost management, green growth, and sustainable efforts. The CEOs like to speak big grammar. What exactly is the CEO saying? Innovative product offering is they tend to have a little bit of mix of their products that is market penetratable. And then we've got strategic operations and distribution. So they are moving their products across market a lot better and more strategically and faster. And they seem to also be raining down on cost, which is what they mean by focused cost management. Of course, green growth and sustainable efforts means they are also deploying sustainability, strategies like maybe using solar panels and stuff like that for their production. And in terms of outlook, Lafarge says it plans to tap into volume opportunities across markets in Nigeria and continue delivering value while pursuing an accelerated green growth strategy. Lafarge has been one of the better stories for the cement industry this year. All cement companies doing pretty well, but Lafarge essentially giving Dangote Cement and Bora Cement a run as well. We do think that Lafarge is going to break into that 1 trillion revenue, club pretty soon. The way it's going. Because half year alone, if you look at the Q1 and Q2 numbers, they're currently on 516 billion naira. Revenue is up 75% year on year. Again, this is the same economy that everyone is complaining about. Things look bad, but companies seems to be minting money. They seem to be minting a lot of money. And Lafarge has just showed that. And we're going to go to another cement company as well that did release numbers during the quarter. Let's see if I have a cement company on my radar. Okay, I'm going to get to that in a bit. Let's just follow the track that I have here. The next up is Owando. Yeah, Owando was on the news last week, and they announced that they were planning to raise 500 billion in capital as part of their major debt restructuring. So it's a bold move, and the company says it wants to raise 500 billion naira, or in foreign currency equivalent. And it kind of makes sense because Owando is heavily indebted, and so at some point they need to pay down those debt. They've gone through a whole lot of restructuring, and that restructuring was driven partly by debt, and so they need to figure out how to start to pay down that debt so that they can start to pay a lot more dividend to shareholders. Because this is a company that hasn't really done that for years now, almost a decade. And so this is the next phase of their massive restructuring plans. And they're saying they could be doing public offers, private placements, or right issues, whichever ones, or even debt conversions. That's basically converting debt into equity. So investors are basically reading between the lines here and trying to be sure of what this really means for them. And then just in terms of debt conversion as well, Wando says it is proposing to convert $300 million in debt into equity from its existing $375 million reserve-based lending facility. And this would, of course, almost eliminate interest expenses, improve its capital structure, and boost financial flexibility. So interesting stuff going on in Owando, at the moment. Now, I'll move on to Academy Press. I did mention Academy Press is one of my favorite stocks right now, and they did release their numbers, and they had a full year. Their year end is March 31st, 2025, and they announced a pre-tax profit of 1.17 billion, a staggering 344% increase year on year. Because they did 264 million the year before. Just think about that. They did 264 million in 2024, I beg your pardon, and then now 2025 year end they have done 344% increase, more than 3 times. So again, like I'm saying, companies are minting serious money on this economy. Revenue 4.5 billion, up 1.7% year on year, but it appears that most of the money was made from massive cost reduction. That's something worth really studying. How are they able to reduce cost in a high inflationary environment by 8.67%. And that basically just boosted their gross profit. And that's why the company is doing well. In terms of sales drivers, they did say book sales remain the core revenue, generating 4 billion, with the Southwest region as is major breadbasket. So interesting to see this company, how they will do if they start to make money from other regions and not just the Southwest. So they did declare 15 kobo dividend, and investors seem to like what they have seen. Now the next company is Dangote Sugar. Dangote Sugar has had a very, very rough run over the last 3 years. They were badly hit by the devaluation that happened in 2023. And so they've been racking up quarter-on-quarter losses, like losing money on a quarterly basis. But Q2 2025 seems to be a tipping point for the company because they have now swung back to profit. Wow, look at that. So Dangote Sugar stayed major recovery, reporting a pre-tax profit of 523 million. Thin, but huge, considering that it's a turning point for the company. And so if you also remember that this time last year, this company lost 104 billion. I mean, like, think about that, 104 billion. So they're no longer in losses. And why did that happen? Revenue was up 25%. Are you guys consuming more sugar? I mean, are you seeing sugar? Or are you buying more Dangote Sugar in your household? I kind of think so, because when you go to shelves these days, you tend to see a lot of Dangote Sugar on shelves of supermarkets. And looks like that is showing in their top line as they're gaining 25% year on year. Cost of sales did go up slightly, 6.3%, way below inflation numbers. Well, I mean, except maybe when you analyze it, but I mean, year on year is what we're looking at here. So 6.3%, gross profit up 352% to 42 billion. So the very interesting thing about finance and accounting is that if you're growing your revenue pretty fast and you're reducing your cost at a slower rate, the gross profit tends to be astronomical. That's kind of like a trick that a lot of companies use as part of their restructuring. So pre-tax profit was generated by the company. So solid thing for them. Now, something that we did notice about Dangote Sugar, somewhere in their numbers, and the analysts and Nairametrics picked this up. I mean, like, we have solid analysts, of course. Sales to Nigerian bottling companies, the makers of Coca-Cola, contributed 63.9 billion, about 32% of their Q2 revenue. That's astonishing, isn't it? Yeah, because Dangote Sugar, of course, they sell sugar to retail, to households, but they do also service major companies, conglomerates. So that's a solid business. You see, this African richest man, he's not just an African richest man. This guy controls a lot of businesses in this country. And so you're seeing Dangote Sugar doing pretty well at 32% up in terms of what it got from 32% as contribution from just servicing Coca-Cola. All right, we're going to go right into the next segment, which is Airtel Africa. So Airtel Africa also delivered strong Q1 numbers, profit up to 69%. Airtel ends its full year March anyway, so Q1 is as of June this year. And so from what we gathered, pre-tax profit was up. They minted a pre-tax profit of $273 million, up to 69%, while profit after tax also surged fourfolds to $156 million. So in terms of revenue, Airtel is $1 billion revenue company. So they did $1.4 billion in revenue, solid numbers. EBITDA numbers, $679 million. In terms of its debt strategy, 95% of operating debt is now in local currency. That is what a lot of these telcos did. You know, the funny thing about devaluation and people who didn't like a lot of our Forex policies is that this Forex policy just basically disciplined everybody. So a lot of companies have also changed their entire capital structure. So rather than borrowing dollars, you see a lot more Nigerian companies borrowing Naira and then they go on to buy dollars. Before, what they would have probably done is borrowing dollars because they want to match their dollar inflow with their dollar outflow and all that crap. That doesn't happen anymore. So people are saying, you know what? Why don't we just borrow in Naira? Because that way you don't have foreign exchange risk down the line in case anything happens. And so that's what's happening. And that is also filtering a lot into the exchange rate. In fact, I think I'm going to do a money brief on this later this week. Yeah, so what else are we seeing? Time is not on our side. But just on Airtel as well. Airtel is a suit company, remains a suit company. If you're wondering, what was suit? Suit, the stock's worth over 1 trillion naira, right? And that is an Nairametrics benchmark for some certain stock, just an elite club. And a lot of these companies are also worth over $1 billion now. Nigerian companies quoted on the exchange worth over $1 billion. So we do have them there. And Airtel is one of those companies. So solid numbers from Airtel. We'll be tracking its share price currently at 2,310 naira. Market cap at over 8.6 trillion. That's over $5 billion or thereabout. And that's what this company is trading at. All right, so we'll move on to Guinness. Guinness is another company that is doing pretty well. Imagine that Guinness was sold. Well, Guinness wasn't sold, but the majority shareholders, Diageo, basically sold to Toleram, and these guys are doing an amazing turnaround job. No pun intended. Toleram did a turnaround job on Guinness. And so Guinness also is back in the green for the quarter ended June 30, 2025. The beverage giant posted a pre-tax profit of 13.5 billion, reversing the loss of 13.2 billion. Like this is this company was just acquired slightly over a year ago. And it's interesting to see how well they've done. I was in their retreat sometime in December, where I was giving a macro talk to their management, and being in that room, you could see these guys were serious. These were people who were very focused on turning around this company and growing its numbers. So it's pretty interesting seeing what is happening in Guinness. Gross profit up 88% to 44.4 billion. And so retained losses has now narrowed to 30 billion, which means Guinness could just pay profit. What am I saying? Pay dividend by the end of the year. They can actually, because they're already turning around their retained profit. But let's just probably want to give them another 1 year to see how well the turnaround goes. But this is a company surely turning things around. So I want to go quickly to Okomu Oil. My God, there are just so many companies, but Okomu Oil happens to be the last on our list. Okomu Oil pre-tax profit up to 34.8 billion, gaining 459% profit, more than quadrupled. Are you guys seeing? I told you, companies are doing pretty well. Revenue up 127.5% to 71 billion. Okomu Oil share price currently at 913 naira. Now, Okomu Oil, my own story. I bought the stock years ago, almost 10 years ago, at 35 naira. It's currently at 930. Can you figure out what my return can be? I haven't gone to check that stock yet. I should go to. It's probably one stock booking house somewhere, but I do remember I bought that stock at 35 naira. It's currently at 913 naira. So there are good stories out there in the Nigerian stock market. All right, so that has been Follow the Money, brought to you by Nairametrics. Of course, if you want to watch this episode again, you want to go back to our YouTube channel and check it. It's going to be posted there later today. There's going to be a whole lot of stuff we're going to post in this, because there's so many things going in the stock market, several breakdowns. You want to watch In Good Company, where we also break down companies and like sort of dissect into a few companies to figure out what's going on there. Yeah, so until we do this again next week, do have a profitable week ahead. Goodbye.